Hello and welcome to Dinar Shift. The world of global finance is often characterized by measured, predictable movements, yet every so often, a single, decisive announcement lands with the force of a sudden, powerful shift, catching observers entirely off guard. This is precisely the scenario that unfolded recently within the financial architecture of Iraq. The implications of this development, originating from the highest echelons of the Iraqi financial system, are reverberating through the desks of international investors, seasoned economists, and dedicated currency analysts who have been following the compelling, long-anticipated story of the Iraqi Dinar. The Central Bank of Iraq, or CBI, has officially received the highly anticipated and extensively discussed digital green light. This is not merely a transient piece of market speculation, nor is it an internal memo that somehow found its way to the public. It is a full formal authorization to commence the large-scale execution of the next critical phase in Iraq's ongoing digital financial transformation. The sheer magnitude of this moment lies not only in the fact that it occurred, but also in the unanticipated speed and the far-reaching scale of the consequences it implies for the nation's economy. While many analysts projected significant developments for Iraq within the 2025 timeframe, few predicted a move this aggressive, this swift, or one that carries such profound potential to fundamentally redesign how the nation manages its currency, its international trade, its security infrastructure, and, ultimately, the entire future trajectory of its national currency. This is a transformation that touches upon more than just technological upgrades. It signals a fundamental adjustment to Iraq's economic destiny. The first crucial element to grasp is that this digital green light transcends the simple implementation of a new software update or the addition of a modern feature to existing banking applications. Instead, it signifies a profound structural pivot, actively transitioning Iraq away from a traditionally cash-heavy, manually administered financial framework toward a fully integrated, modern digital economy that achieves clear parity with prevailing global financial standards. For a considerable number of years, Iraq's financial operations were encumbered by legacy systems, which rendered the entire economic structure susceptible to systemic vulnerabilities, including corruption, the circulation of counterfeit currency, protracted transaction times, and a disproportionately heavy dependence on the use of the US dollar for internal transactions. This deep-seated, cash-based operational model has consistently represented a formidable impediment to the realization of Iraq's broader, long-term national economic objectives. Although the central bank has been engaged in a gradual, deliberate process of modernization, the achievement of this monumental next step demanded an explicit authorization and commitment from the nation's highest levels of governance. With this crucial authorization now secured, the CBI is empowered to drastically expand its digital services, facilitating a nationwide acceleration of mobile banking capabilities, the introduction of comprehensive e-wallet infrastructure, and most importantly, the acceleration of the Digital Dinar initiative, a concept that has been the subject of quiet yet persistent speculation for many months within financial circles. The reason this particular development is capturing the focused attention of financial analysts globally is not simply that the digitization of payments is, in itself, a novel concept. Rather, it is because this single action effectively completes a major, long-standing gap in Iraq's overarching currency reform puzzle. The element of surprise stems from the recognition that this is far more than a routine technical progression. It is a strategic masterstroke that positions Iraq for a new era of financial control and transparency. What amplified the surprise for many observers was the unexpected speed of execution of this decisive digital strategy so early in 2025. The general consensus among prognosticators suggested that Iraq would likely remain in an extended planning and preparatory phase for at least another year, primarily focusing on testing limited, small-scale pilot programs rather than committing to a broad, full-scale deployment. However, the definitive announcement from the central bank paints a strikingly different, more compelling portrait, one characterized by pronounced urgency, systematic readiness, and clear confidence in the nation's financial control. This digital green light grants Iraq the indispensable freedom to decisively break away from the traditionally slow and restrictive financial practices that have defined the past several decades. It fundamentally signals that the nation is no longer passively awaiting the arrival of economic stability. Instead, it is proactively and aggressively constructing the very sophisticated systems required to generate and sustain that stability from within. The movement of any national economy from a reliance on physical cash toward robust digital structures immediately confers several critical advantages. Foremost among these is the enhanced visibility over nearly every financial transaction conducted within the country. This systemic overhaul grants the government the immediate capacity to detect and flag illegal financial flows instantaneously. Furthermore, the new digital tools provide an effective mechanism to significantly curtail currency manipulation, substantially reduce the scale of black market operations, and virtually eliminate the detrimental effects of delayed payments. Crucially, and perhaps most significantly for the nation's long-term economic health, the move secures a substantial increase in real control over the underlying value and future destiny of the national currency itself. The sheer audacity of Iraq's move stunned many observers because it powerfully indicates that the CBI now believes the nation possesses the requisite internal stability and sophisticated infrastructure to fully embrace and manage this unprecedented level of financial control. An assessment that carries immense implications for the dinar's future valuation and role on the global stage. Adding another layer of intrigue is the realization that Iraq has been diligently and quietly laying the foundational groundwork for this moment over an extended period, often beneath the radar of mainstream international attention. Over the preceding 2 years, the CBI executed a meticulous, multi-pronged strategy that involved installing modern financial rails, comprehensively upgrading existing banking software, securely connecting domestic banks to major global payment platforms, and rigorously enforcing a new, more stringent set of financial compliance rules. Strategic partnerships forged with prominent international technology and financial corporations have successfully modernized the country's point-of-sale systems and simultaneously established secure, novel digital gateways for both internal and external transactions. Moreover, Iraq has been actively focused on fortifying its regulatory environment, establishing powerful new defenses specifically designed to prevent and prosecute financial crimes. While the public emergence of this digital green light may have appeared sudden to the international community, it was certainly not an event that arose from an unprepared environment. Behind the visible public announcements, this approval is accurately seen as the final, pivotal step in a meticulously sequenced and prolonged series of technological and systemic upgrades that the Iraqi financial authorities have been painstakingly coordinating. The reason this particular announcement generated such a forceful reaction is precisely because this authorization now transitions the Central Bank of Iraq from an extended period of comprehensive preparation into a full-scale phase of execution. The phase of cautious deliberation is unequivocally over. The era of limited internal testing is now concluding. Iraq is officially entering a massive implementation phase, and it is within this dynamic phase that truly transformative change takes root and fundamentally reshapes a nation's economy. When a strategically significant nation, like Iraq, flips the operational switch from mere planning to concrete, large-scale action, the entire global financial community is compelled to take serious notice of the commitment. A central, critically important component of this overarching financial transformation is the rapidly evolving strategy for the digital dinar. While Iraqi financial authorities have yet to release a detailed, public-facing blueprint for the full nationwide deployment, reliable sources within the financial sector have consistently affirmed that the project bears a strong structural resemblance to the initial developmental stages of various central bank digital currency (CBDC) models already in use or being piloted by other sovereign nations worldwide. A fully realized digital dinar would function with the same sovereign authority and legal tender status as its physical counterpart, being issued and fully backed by the central bank, but its entire existence would be in a purely electronic, ledger-based form. It is critical to underscore that this initiative is fundamentally distinct from decentralized cryptocurrencies. It is not a decentralized ledger nor a private token. This will be a sovereign, national currency, with its stability and supply tightly controlled and regulated by the central government and the CBI. The structural integrity of a digital dinar will permit instantaneous payments, facilitate real-time settlement of financial obligations, ensure complete transaction traceability, furnish sophisticated anti-fraud tools far beyond those available today, and enhance seamless cross-border interoperability. The profound significance of this project is clear. No national government commits to developing a sovereign digital currency unless it harbors a fundamental and non-negotiable intention to fully modernize its entire framework for monetary policy. A robust digital dinar system will substantially simplify the complex processes of managing the national money supply, accurately tracking inflationary pressures across the economy, instantly detecting and flagging illegal financial activities, and effectively calibrating the necessary adjustments to market liquidity. Furthermore, it creates the essential foundation of transparency required to confidently support and implement future, more complex financial reforms, which are widely understood to include significant potential exchange rate adjustments. This is precisely why the level of attention is so high today. A sovereign digital currency is not engineered for convenience, it is created to drive fundamental financial evolution. This naturally leads to the key question at the forefront of the public's mind. What is the direct relationship between this digital transformation and Iraq's long-established strategies for comprehensive currency reform? For many years, Iraq has openly engaged in discussions regarding the systematic modernization of its monetary structure. These discussions have included the potential for implementing major steps such as formally deleting zeros from the currency's face value, issuing completely new denominations of banknotes, and actively working to restore a higher degree of international recognition and strength for the dinar on the world financial stage. However, the successful execution of any shift of this massive scale necessitates a financial system that is fundamentally clean, transparent, and completely traceable. Attempting to enact any major currency reform without a fully functional, modern digital infrastructure in place introduces an unacceptable level of systemic risk. Excessive reliance on physical cash allows significant amounts of currency to disappear from regulatory oversight, provides fertile ground for corruption to interfere with policy objectives, and introduces far too many unpredictable variables into the financial equation. Digital systems, by their very nature, work to systematically eliminate these operational risks. They provide the government with the ability to meticulously account for the location and movement of every single dinar and to track every transaction in real time. When a nation successfully and comprehensively digitizes its economy before attempting a major monetary reform, it constructs the necessary scaffolding for a smooth, controlled transition that is free from the chaos and mismanagement that otherwise characterize such an endeavor. Consequently, the announcement of this digital green light is being interpreted by many as the preparatory step before the main step. It is not the reform itself, but rather the absolutely essential foundational element that makes the ultimate, long-awaited reform structurally possible and financially prudent. This contextual understanding is precisely why financial analysts were caught off guard. Major financial foundations are logically established before any formal announcements of reform are made, and Iraq may now be in the process of fitting the final critical pieces of that foundation into place, signaling its readiness for the next stage. Another surprising and critical dimension to this development is the robust and evident political support driving this large-scale digital transformation. Prime Minister Mohammed Shia al-Sudani has consistently and publicly championed a clear agenda centered on comprehensive economic reform, sustained modernization, rigorous anti-corruption measures, and, most notably, the strengthening of the national currency. Yet, few in the international community anticipated such swift and seamless operational alignment between the highest levels of the government and the central bank. The fact that this decisive approval was granted rapidly and appears to have met with no significant political resistance strongly suggests a rare and potent form of unified national leadership. Such unity is historically uncommon in Iraq's recent political narrative. When such potent political unity aligns with the undeniable imperative of financial modernization, the pace of major national change can accelerate far beyond typical expectations. Prime Minister al-Sudani has repeatedly and unequivocally articulated Iraq's firm strategic goal to significantly diminish the long-standing national dependence on the US dollar, thoroughly eliminate financial irregularities and corruption, and propel the Iraqi dinar to a preeminent position at the forefront of all domestic economic activity. This newly secured digital approval integrates flawlessly with that stated mission. It provides the government with a practical, high-leverage mechanism to curtail cash-based corruption, guarantee institutional transparency, and progress systematically toward achieving genuine, unassailable economic sovereignty. Therefore, this is not merely a technological breakthrough, it represents political momentum successfully translating into concrete, nation-changing action. Operating largely behind the scenes, one of Iraq's most formidable current economic assets is the sheer size and strategic placement of its foreign currency reserves. The central bank's reserves have experienced a significant and sustained increase, positioning them among the highest and most robust in the entire region. These vast reserves function as the non-negotiable, secure bedrock for any and all potential future currency adjustments or revaluations. When a sovereign nation successfully fortifies its reserves to this extent, it simultaneously bolsters its overall economic stability, significantly enhances global investor confidence, and secures the financial capacity required to decisively support any future exchange rate decisions. This means that if Iraq chooses to implement an adjustment to the value of the dinar, it possesses the immense financial backing necessary to execute that change without triggering widespread economic chaos or market panic. This is the precise juncture where the digital transformation strategy acquires an even deeper layer of strategic significance. The strategic combination of a fully modernized, completely traceable financial system and the backing of exceptionally strong currency reserves creates the ideal, highly controlled operational environment for any future monetary reforms to be executed. Many experienced analysts are now convinced that Iraq has been deliberately and quietly constructing this dual foundation, first, achieving strong reserves, and second, establishing digital transparency. What truly caught the world off guard was not just the digital authorization itself, but the deliberate and precise sequencing of events. First, the fortification of reserves. Second, the modernization of systems. Third, the securing of political unity. And now, the full-scale activation of the digital rollout. This highly structured, almost predetermined sequence is far too organized and intentional to be considered merely coincidental. One of the most immediate and profound anticipated effects of this major financial pivot will be a dramatic reduction in systemic corruption. Iraq has contended with pervasive financial leakage and illicit flows for decades. Cash is inherently vulnerable to theft, smuggling, concealment, or counterfeiting. Furthermore, shadow markets and black market trading naturally flourish in economies that rely heavily on physical currency. For many years, the Iraqi government has struggled relentlessly to reduce the illegal movement of the US dollar and to successfully stabilize its official exchange rate. However, modern digital systems instantly and comprehensively disrupt this entire pattern of illicit behavior. Under the new digital framework, every single dinar in circulation becomes precisely traceable. Every financial transfer leaves a clear, immutable digital footprint. This makes the execution of large-scale financial fraud significantly more difficult, and the bulk smuggling of the dollar becomes logistically and practically impossible. As a direct consequence, the shadow markets will inevitably weaken and shrink. Furthermore, one of Iraq's most persistent domestic issues, pervasive government payroll fraud, can be almost entirely eliminated through the mandatory use of secure digital payouts. The digital green light is therefore not primarily about modern convenience. It is a powerful structural tool for fundamentally cleaning up a financial system that has been exploited for generations. The aggressive pace with which Iraq is pursuing this unprecedented level of transparency surprised many observers, powerfully signaling the country's high degree of confidence and readiness, and its unwavering institutional desire to definitively close the door to widespread corruption once and for all. As Iraq proceeds with this comprehensive digital modernization, its profile on the international stage will inevitably become far more attractive. Modern digital systems are the essential backbone of all contemporary global commerce. International financial institutions, by preference, gravitate toward environments characterized by digital clarity and secure, efficient payment lines. Global investors favor systems where their capital is accountable and cannot easily vanish into financial shadows. Multinational companies prefer economies that offer rapid, entirely electronic, and low-risk transaction capabilities. Iraq's deliberate effort to partner with global financial networks sets the necessary stage for genuine international interoperability. With this crucial approval, the Iraqi dinar can be more easily and seamlessly integrated into global payment rails, leading to easier trade settlements, demonstrably higher investor confidence, and ultimately, far wider global recognition. The strong positive reaction observed across global markets following this digital announcement is a direct reflection of this positioning. Iraq is actively and strategically placing itself as a fully participating, modern member of the global economy, rather than a nation lagging behind. When a country of Iraq's strategic importance, possessing massive oil reserves and regional influence, successfully achieves digital alignment, the resulting economic impact naturally transcends its own national borders. For the typical Iraqi citizen, this dramatic digital transition holds the potential to fundamentally transform daily life. At present, the vast majority of Iraqis rely almost exclusively on cash, a system that is inherently slow, carries security risks, and is often highly inconvenient. Many individuals still routinely spend hours waiting in lines to complete the most basic banking transactions. Digital systems are the remedy to this inefficiency. Citizens will soon be capable of transferring funds instantly, settling bills electronically, saving their money securely, and receiving salaries without bureaucratic delays. Government financial benefits will be dispersed directly into secure digital wallets, thereby eliminating the potential for intermediaries who historically siphon funds. Small and medium-sized enterprises will gain the ability to accept modern digital payments and access vital small business loans with far greater ease. Furthermore, young entrepreneurs will be empowered to participate in the burgeoning global e-commerce sector in ways that were previously unimaginable. This authorization is not a mere government infrastructure upgrade, it represents a profound lifestyle change for millions of people across the country. What particularly surprised most analysts is the apparent speed with which Iraq appears ready to embrace this cultural shift. Reports indicate that even older citizens, who have historically exhibited resistance to adopting digital methods, have begun using new mobile banking solutions, often driven by government incentives and educational programs. Iraq is demonstrating an accelerated pace of social and economic evolution that surpasses most external predictions. It is undeniable that no fundamental national transformation of this scale can be executed without facing substantial challenges. The process of transitioning an entire nation from a deep reliance on physical cash to a sophisticated digital system mandates comprehensive training, widespread public education, significant infrastructure investment, and, most critically, nationwide acceptance and trust. Local banks must undertake large-scale upgrades to their core systems. Businesses must adapt their entire operational models. Citizens must be educated and trained on the new digital tools. However, the evidence suggests Iraq is already proactively addressing these monumental issues. Formalized training programs have been extensively rolled out. Banks are now legally mandated to adhere to a new, rigorous set of digital compliance rules. Government offices nationwide are being systematically equipped with updated electronic payment platforms. Furthermore, the central bank is working in close, continuous collaboration with all major financial institutions to ensure a collective, systematic state of readiness. The element that caught observers off guard is that Iraq is not merely making a public announcement about digital transformation, it is actively, demonstrably preparing the entire ecosystem for its implementation. In the history of global reforms, many nations announce major changes only to delay the critical implementation phase for years. Iraq appears to be adhering to the precise opposite philosophy, building the systems first and announcing the green light second. In the immediate months ahead, there are several key indicators that financial analysts will be closely monitoring to gauge the progress and depth of this commitment. The first indicator is the release of official CBI updates detailing the concrete progress being made with the expansion of digital payments and the modernization efforts. The second will be any formal announcements regarding Iraq's deeper integration with international financial systems, especially any decisive steps involving secure cross-border digital settlements. The third key signal will be government policy adjustments specifically aimed at reducing the prevalent use of the US dollar in domestic trade and actively increasing the use of the dinar-based trade mechanisms. The fourth will involve the launch of highly visible pilot programs, which may include limited-scale testing of the official digital dinar, or the expanded rollout of more sophisticated e-wallet services. These critical signals will collectively reveal the true speed of Iraq's current momentum and how close the nation is to fully completing this systemic financial transition. The surprise here is that Iraq has already quietly confirmed the completion of several of these preparatory actions. The digital green light is a powerful indication that a wave of further, more detailed announcements is imminent. On a global scale, Iraq's ambitious move carries wider, impactful implications. As major oil-producing nations successfully modernize their financial sectors, they inherently gain increased leverage and influence in global trade negotiations. The eventual deployment of a digital dinar opens a strategic doorway for Iraq to begin settling its massive oil contracts in its own national currency, rather than remaining so heavily reliant on the US dollar for transactions. While any such shift would be necessarily gradual and highly measured, even small initial steps would significantly boost Iraq's fundamental economic independence and global influence. This initiative is not designed to replace the dollar, rather, it is a clear effort to balance the global financial power structure. A modernized, fully digitized, oil-backed economy, fortified by massive reserves, becomes exponentially harder to pressure financially, thus gaining far greater control over its own national destiny. This fundamental dynamic is what renders this moment truly historic. Iraq is strategically positioning itself not as a follower in the global economic arena, but as a sovereign nation fully prepared to decisively shape its own economic path forward. The digital transformation also yields tangible benefits for Iraq's vital local business sector. Small and medium-sized enterprises will gain crucial access to modern electronic payment tools that will enable them to compete more efficiently and effectively in the modern marketplace. Importers and exporters will benefit immensely from significantly faster and more secure trade settlements. Government contractors will receive payments through completely transparent, auditable channels, thereby dramatically reducing both payment delays and the potential for corruption. Digital systems are capable of elevating entire industries by facilitating faster processing times, simplifying complex record-keeping, and ensuring clear, unambiguous financial tracking. This comprehensive improvement in efficiency and transparency naturally boosts overall economic confidence and simultaneously opens the door to greater levels of foreign direct investment. International investors consistently seek transparency, demand accountability, and prefer predictable, fully traceable financial systems. Iraq's new digital framework is intentionally engineered to provide all three of these foundational assurances. Education and public training are also playing a critical foundational role in this transition. The CBI is currently rolling out extensive financial literacy campaigns specifically designed to instruct citizens across all demographics on the secure and efficient use of digital wallets, modern mobile banking applications, and various secure online payment systems. Academic institutions, including schools and universities, are actively introducing new digital finance modules into their curricula. Banks are deploying dedicated representatives into local communities to systematically explain the mechanics and benefits of the financial transition. This comprehensive and proactive level of institutional preparation serves to reassure both domestic populations and international audiences that Iraq is maintaining a serious and unwavering commitment to this digital reform. The extensive nature of these preparatory efforts has been a key factor in catching many analysts off guard, demonstrating that Iraq is not relying on improvisation. It is executing a long-planned, meticulously coordinated, and powerful transition. Another crucial long-term impact of this shift will be a substantial increase in national financial stability. Digital systems provide the central bank with the sophisticated capacity to continuously monitor market liquidity in real time. If underlying inflationary pressures begin to surface, the CBI will be able to respond to the threat with far greater speed and precision. If the economy exhibits signs of a slowdown, monetary tools can be deployed instantly and accurately. Traditional manual banking systems often react too slowly to sudden or significant economic shocks. The new digital architecture is faster, substantially smarter, and more operationally efficient, providing Iraq with significantly enhanced control over inflation, prevailing exchange rates, and unexpected financial fluctuations. This higher degree of control simultaneously creates the necessary stable conditions for the implementation of the more ambitious, long-term monetary strategies that many dedicated viewers have been waiting for. This digital green light may also significantly influence Iraq's regional role and standing. Many neighboring countries across the Middle East are also engaged in the complex process of digitizing their respective financial sectors. Iraq's current rapid modernization trajectory allows it to participate as an equal partner in emerging regional financial networks, participate in cross-border payment hubs, and establish secure digital trade corridors. This engagement has the potential to substantially increase Iraq's economic influence in the Middle East and fortify its essential economic partnerships. The surprise element here is that Iraq is now demonstrably moving at a pace that is equal to, or in some cases even faster than, some of its established neighbors. This is a clear signal that this is no longer the Iraq of a decade past. It is a nation that is actively stepping into a role of regional economic leadership. One of the most far-reaching long-term effects of the full digital transformation will be the enablement of genuine economic diversification. For many decades, Iraq's national economy has been overwhelmingly dependent on its oil revenues. Sophisticated digital systems create immediate, tangible opportunities for the emergence of entirely new industries, including a vibrant e-commerce sector, advanced financial technology, fintech, services, digital consulting, and modern, efficient banking products. These emerging sectors have the potential to employ thousands of young Iraqis and significantly reduce the nation's structural reliance on oil revenues. This diversification is absolutely critical for achieving enduring, long-term national stability. Here again, this shift arrived faster than most predictions, which had forecast meaningful diversification would require another decade to mature. The digital green light serves as a powerful, non-negotiable accelerator for that crucial timeline. Looking forward, the next 12 to 18 months are expected to be fundamentally decisive. Iraq is highly likely to release a greater volume of technical and operational details concerning the Digital Dinar initiative. Local banks will be mandated to integrate deeper, more comprehensive digital features into their service offerings. The government will continue to expand the scope and reach of its electronic salary payment systems. Foreign investor interest is anticipated to intensify markedly as institutional transparency continues to improve. And, most importantly, the central bank will remain steadfastly focused on constructing the unshakable foundation that is required to confidently support all of its future monetary and exchange rate decisions. Iraq is now in decisive and rapid motion. When a nation of this geopolitical and economic importance begins to move with such speed and structural commitment, the entire global financial community has no choice but to pay acute, sustained attention. To succinctly summarize the moment, today's announcement is far more than a routine policy update. It is an undeniable turning point in the nation's economic history. Iraq has officially and boldly stepped into its comprehensive digital era. The central bank has successfully secured the full authorization it required. The highest levels of the government are operationally and politically aligned. The sophisticated technology and supporting infrastructure are poised for deployment. And the citizens are actively adapting to the change. Whether this massive undertaking is ultimately characterized as a major reform, a financial reset, or a digital shockwave, one reality is now abundantly clear: Iraq is no longer in a state of economic stasis. This aggressive, rapid move caught observers off guard because it powerfully signals that Iraq is not only ready for its next chapter, but is actively writing one that is designed to be stronger, technologically smarter, far more transparent, and more deeply connected to the global economy than ever before. The implementation of robust anti-money laundering and anti-corruption measures is another vital pillar of this digital transformation. As financial transactions move from untraceable physical cash to auditable digital ledgers, the ability of illicit actors to hide funds or engage in fraudulent activities is severely diminished. The digital system imposes a natural transparency that acts as a powerful deterrent. This institutional cleaning up process is essential for establishing the credibility required to manage a modern, internationally recognized currency. The commitment to a fully traceable system confirms Iraq's determination to meet the rigorous financial oversight standards demanded by the international community. The educational efforts surrounding this reform extend beyond mere usage instruction. They delve into fundamental financial literacy. The aim is to empower the Iraqi populace with the knowledge necessary to manage digital finances, understand the benefits of formal banking, and safeguard their assets in the new environment. This widespread educational push is critical for achieving a true, nationwide cultural shift away from cash and toward a fully banked and digitally literate society. The swift mobilization of resources for this public education component is another indicator of the seriousness with which Iraq is pursuing this foundational reform. The sheer volume of foreign currency reserves Iraq currently holds serves as a robust stabilization mechanism during this period of transition. These reserves provide the central bank with the necessary liquidity and capital strength to manage any short-term market volatility that may arise from the introduction of major financial system changes. The combination of strong reserves with transparent digital control minimizes the risk profile for investors and makes the overall financial market in Iraq a much safer and more predictable environment for domestic and international capital flows. The focus on cross-border digital settlements highlights the long-term goal of increasing the dinar's utility and stature. By integrating into secure international payment rails, Iraq is laying the foundation for its currency to be used more seamlessly in regional and global trade transactions. This move is a strategic step toward reducing reliance on intermediary currencies for trade, thereby bolstering national economic sovereignty and promoting the dinar as a more prominent regional financial instrument. The digital dinar's design as a sovereign currency ensures that the government maintains essential control over monetary policy, unlike decentralized cryptocurrencies. This control allows the CBI to conduct traditional monetary functions, such as interest rate adjustments and open market operations, with greater precision and speed. The ability to deploy monetary tools instantaneously in response to economic indicators is a major gain in economic management capacity, providing a sophisticated defense against inflationary pressures and economic downturns. The government's clear policy of reducing reliance on the US dollar is not an attempt to eliminate the dollar from the market, but to achieve a more balanced and diverse currency portfolio for trade and internal transactions. The digital infrastructure provides the practical means to encourage the greater use of the dinar, especially in domestic transactions and government payrolls, without resorting to overly restrictive or inefficient cash-based controls. This gradual shift is a key component of the move toward genuine economic autonomy. The transformation of payment systems also directly benefits small businesses by enabling them to participate in the digital economy. Instant, secure payments reduce the cost and risk associated with handling large amounts of cash, improve cash flow management, and simplify tax reporting. Access to digital transaction records can also help small businesses qualify for formal loans from banks, fueling economic growth from the ground up and diversifying the nation's economic structure away from its oil dependence. The political consensus behind this reform is a rare and powerful catalyst. The alignment between the legislative and central banking powers sends an unmistakable message of institutional commitment to the international financial community. This unity minimizes the risk of policy reversal, which is a key concern for foreign investors. This robust political backing ensures that the technical and financial implementation can proceed with the necessary speed and depth. Finally, the commitment to transparency through a digital financial infrastructure is the strongest signal yet of Iraq's dedication to eradicating systemic financial leakage. By creating an indelible digital record for virtually all transactions, the nation is actively removing the hiding places that have long enabled corruption to thrive. This aggressive pursuit of accountability is arguably the most fundamental and necessary prerequisite for any successful long-term national economic reform.